With modest stock market gains so far this year and a Fed signaling that they may be coming to an end on rate raising, are we out of danger? Well, let's dive into that today. My name is Brian Cannon, and welcome to Markets in 5. From an economic standpoint, depending on your view of the market, I think you can find any sort of documentation out there to support it. For instance, in this chart, you can clearly see that commodities versus equity valuations are at their lowest, and that ratio has coincided with other market kind of peaks in the past, so the beginning of 2000 before the tech bubble. Or you've got this chart, which is the third largest box producer, showing a dramatic drop off in demand. And a drop in demand is an on-time economic indicator, basically revealing that consumer spending is starting to reduce, and which obviously will have an impact on manufacturing, imports, and it'll also show a decrease in logistics and transportation. All right, now jumping into some technicals, you can see that the market essentially has three types of trends. You've got a short-term trend, a mid-range trend, and a long-term trend. So we just came off of a long-term trend down. Now we're I would say in the throes of a mid-term trend that essentially has been respected so far, and then you've got a short-term trend, right? So these little short-term swings are shorter-term trends. This kind of trend here is more of a mid-range trend, and then you've got the long-term trend. And so right now, what I would say our style and what we focus on primarily is the mid to short-term trend. We want to see, are we breaking out of a long-term trend, and where are we in that progress? So, right now with the market where it is, you've got RSI, which is kind of just jumping around here in the middle. So it's telling me that the market's just going to be real jumpy here for a bit. So it's going to kind of consolidate maybe these gains right here. And so the question is it going to kind of result in an upswing, or is it going to result in a downswing? So we're not sure of that yet. But we're definitely in this area called the test, and which was my last Markets in 5 was talking about this area being a big test, and so far it's failed the test. It's kind of broken down. So we'll see. Does it come back up and re-challenge this midterm trend here and potentially break out? Or does it roll over? And if so, at what point does it find some support? I've got several different levels of support listed here in the middle. And then obviously the final support would be, the downtrend line, of course, and then this midterm trend, which has been respected several times so far. So, and then the MACD as well has rolled over a little bit, but it's still positive. So the question is, will it kind of chatter around here in the middle and stay positive, or will it break down and get negative? We did raise some cash. We did have some positions sell, and so we're sitting on a little bit heavier cash right now until the market can kind of figure out what it's going to do. All right, now jumping into our Cannon AIQ strategy. Wanted to give you a couple examples. This is a stock, Zebra Technologies, that we were in the position. We received a sell signal. And quite frankly, it was in line with what I think historically I probably would have kept on. But this signal said, no, get out. We've got trouble. And so we respected the signal, and we got out. And lo and behold, the stock went from 293 down to 251. So we avoided nearly a 15% drop in the stock in a very, very short period of time. Okay, here's another example, Cloudflare. We were in this position, and we received a sell signal, which again we respected, and the stock went from $58 down to $41. So just a massive drop, and again a very short period of time, where the signal was able to get us out. Not at the tip top, but certainly before the major damage was done. And here's an example of Unum, where we received a buy signal. And so again, if you kind of look at the metrics behind it, you had a MACD that was rising, supported by RSI and rate of change, and all the things that we look at when determining if we want to pick something up. So we did receive a buy signal here, which we took. It came down a little bit and then just shot up. And yesterday we took took the profits. So this is an example of identifying a stock, putting it on my radar, and us taking advantage of that move. And finally, this is the position I talked about in the last Markets in 5, where we got a buy signal on Acadia, and what was it going to do? Well, it's continued to rise. It's continued to do very well. And when we look at the metrics, MACD is not crossed over yet. We're coming off a little bit of overbought, so we'll probably chatter around here a little bit. Obviously, if it breaks down, we take our profits and move on. But I'm fully anticipating this stock to come up and hopefully hit this upper metric, which would make this a really nice trade. So time will tell, but so far we're very pleased with not only the buy signals, but also the sell signals on the Cannon AIQ strategy. So in unpacking all of that, if you kind of just break it down section by section, I think that there's a lot of undercurrents in the economy right now that are, I would say, would signal that we're not out of danger yet. The technicals would signal that we're not quite out of danger yet, but things are starting to improve. We're starting to see higher highs and higher lows. And I would say from a signal or from our algorithm perspective, so far it's done a pretty good job on keeping us out of danger. So time will tell, but if you have any questions, give me a shout, and I look forward to seeing you on the next Markets in 5.